Hey everyone, I hope everyone have a wonderful holiday weekend and spend a great time with their families at home. And today I just wanted to read you all an article about what to expect from the housing market in 2023. So I'm gonna try to read this article and make sense to you guys so that you guys can know what to expect. And to clear things out, if you guys are like not knowing what I'm reading, I'm gonna explain throughout the reading. So hopefully this will help you guys understand what to expect for next year's housing market. But this is just predictions. It's not gonna be like a prediction of what's exactly going to happen in the future because anything can change in the future. We don't know what will happen. So as time goes on, that's where we can that's where we can see what the market will do. So this is the article from Keeping Current Matters I would like to share. I also love reading their articles because they put everything under perspective and makes clear sense about what the market is going to do and what it's doing now, and also tells you like your recommendations, either you want to buy or sell. So let's get into it. So the 2022 housing market has been defined by two key things: inflation and rapidly rising mortgage rates. And in many ways, it's put the market into a reset position. As the Federal Reserve, the Fed, made moves this year to try to lower inflation, mortgage rates more than doubled, something that's never happened before in a calendar year. This had a cascading impact on buyer activity, the balance between the supply and demand, and ultimately home prices. And as all those things changed, some buyers and sellers put their plans on hold and decided to wait until the market felt a bit more predictable. So that's what we saw recently, that a lot of buyers backed out because of the rising mortgage rates, and sellers are pretty much feeling unsure about putting their houses in the market. But what I've seen is that we have more inventory this year than we had like from the beginning of this year and from last year. So yeah, but what does that mean for next year? What everyone really wants is more stability in the market in 2023. For that to happen, we'll need to see the Fed bring inflation down even more and keep it there. Here's what housing market experts say we can expect next year. So what's ahead for mortgage rates in 2023? So moving forward, experts agree it's going to be all about inflation. If inflation is high, mortgage rates will be as well. But if inflation continues to fall, mortgage rates will likely respond. While there may be early signs inflation is easing as we round out this year, we're not out of the woods just yet. Inflation is something to watch in 2023. Right now, experts are factoring all of this into their mortgage rates forecasts for next year. And if we average those forecasts together, experts say we can expect rates to stabilize a bit more in 2023. Whether that's between 5.5% and 6.5%, it's hard for experts to say exactly where they'll land, but based on the average of their projections, a more predictable rate is likely ahead. So these are the predictions from Freddie Mac, Fannie Mae, Mortgage Bankers Association, and the NAR, National Association of Realtors. And these are the quarters for 2023, and these are their predictions, and this is their average of all four. So we start to see like the trend goes from 6.3% and is decreasing, and by quarter four of 2023, hopefully it gets to 5.73%, which is the average. And these are the predictions, but we'll see what happens when we get there. So that means we'll start the year out about where we are right now, which is what, 6.35%. But we could see rates tick down if inflation continues to drop. As Greg McBride, chief financial analyst at Bankrate, explains, mortgage rates could pull back meaningfully next year if inflation pressures ease. So if inflation goes up, mortgage rates will go up, but let's hope that inflation keeps going down throughout the year. In the meantime, expect some volatility as rates will likely fluctuate in the weeks ahead. And just to stop right there, from the past 3 weeks, I've been seeing the mortgage rates been going up and down, and it's just jumping up and down. But hopefully, it starts to go down as inflation goes down, and that's what the Fed is trying to do. So, if we see inflation come back under control, that would be good news for the housing market. So, what will happen to home prices next year? Home prices will always be defined by supply and demand. The more buyers and fewer homes there are on the market, the more home prices will rise. And that's exactly what we saw during the pandemic. So that's what we saw when we had low inventory, more buyers, and prices were going crazy, going up, and then the interest rates were going up for mortgage rates, and a lot of buyers backed out, and there were more inventory in the market. That's what we saw. But this year things changed. We've seen home prices moderate and housing supply grow as buyer demand pulled back due to higher mortgage rates. The level of moderation has varied by local market, with the biggest changes happening in overheated markets. But do experts think that will continue? The graph below shows the latest home price forecast for 2023. As the different colored bars indicate, some experts are saying home prices will appreciate next year, and others are saying home prices will come down. But again, if we take the average of all the forecasts shown in green, which is 0.1%, so small, we can get a feel for what 2023 may hold. So the truth is probably somewhere in the middle. That means nationally we'll likely see relatively flat or neutral appreciation in 2023. As Lawrence Yun, chief economist at the National Association of Realtors, says, after a big boom over the past 2 years, there will essentially be no change nationally. Half of the country may experience small price gains, while the other half may see slight price declines. So the bottom line is the 2023 housing market is going to be defined by mortgage rates, and rates will be determined by what happens with inflation, meaning the federal rates, if they increase it up or down by basis points, we'll see what happens with that. And the best way to keep a pulse on what experts are projecting for next year is to lean on a trusted real estate advisor, which is me. And so that being said, guys, hopefully we see a positive result for next year when let's hope that inflation goes down, so the mortgage rates goes down, and let's hope that the Federal Reserve doesn't hike up the rates again. And because I know we're spending a lot of money, I hope that we control our spending so that it cools down the spending that's going on the market. So if you guys have any questions, let me know. I'm going to share you the current mortgage rates right now, which is 6.32% for 30-year fixed loans. And these are the other rates for other loans. So yeah, and so I'm a local realtor here in Nassau County with eXp Realty. I'm a licensed real estate salesperson and realtor. So if there's anything in the world I can do for you in real estate, feel free to reach out. I can give you guys some market updates in your local area. So feel free to reach out. And thank you for watching, and hit the like button and subscribe. All right, take care, everyone. Bye.